banking services available for small businesses. By taking this class today, you're taking an important step to build a better business for yourself. I'd like to start by introducing myself. My name is Diana Zarka, and I'm a small business relationship manager at Addison Bank and Trust, also known as Wintrust Company. So as a relationship manager, I work with small business owners to provide a tailored solutions and support they need to ensure their business succeeds. We have a full agenda today, so why don't we get started? Move over. So first of all, again, I wanted to welcome everyone who joined today. And during this presentation, we'll cover a couple of things. We'll learn what is business banking fundamentals, how to properly choose the right bank for your business, what are some additional banking services available for your business, how to improve your chances of getting a loan at the bank. And at the end, we'll summarize everything and we'll have some time to answer your questions, any questions you might have. So why don't we get started? So let's start by thinking how to choose the right bank for your business. First thing to do when choosing a bank is to consider your unique needs and preferences. For example, perhaps your business is open from early in the morning from 6 a.m. until 9 p.m. and you need to make deposits into your account using an ATM after normal business hours, or perhaps you're running a retail business that's heavy on cash transactions. If you collected a large deposits that you make your deposits to the bank daily or maybe weekly, what do you look for in a bank will depend on your unique business needs. And most banks will list all their core products and services with all the minimum balance requirements on their website. Or sometimes when you go into their lobby, you'll see like brochures with their products and services and explanation of what everything is and how much it costs. However, it's not a bad idea to also call your bank or even a couple of banks in your area and schedule an appointment to meet with a personal banker, a branch manager. Maybe they have someone who specializes in small banking, business accounts. Once you have an appointment set up, sit down and discuss your needs with your business banker or that representative. You can also request their input or ask additional questions if you have any. Being able to sit and talk to a representative can answer a lot of questions for you. And you can also listen for their advice to meet your unique business needs. You know, sometimes it takes more than one appointment. I have customers who come back and see me 3-4 times before they decide to open a bank account. So that's okay as well. Businesses are complex things, and you need to make sure you understand the procedures and policies before you signing up for a product, treasury management, or a business account. There's other things to consider when meeting with the bank. First thing I would concentrate is what is the bank's customer service like? How do they treat their clients? Perhaps you already have an established relationship with a local bank, or maybe you know someone who's pleased with their banking relationship. Ask for a referral, visit multiple banks to see where you fit in. And you know, once you find a good relationship with a key person at the bank, that actually can help you establish credit needs in the future and help you run your business, save you money on fees, and enhance your business opportunities by introducing you to the local centers of influence. We also call them movers and shakers of the community in the banking industry. Another thing I would consider is how accessible the bank you're planning to visit, how far it is from your business or even from your home. As a business owner, you'll spend hours or maybe even days going to the bank each year to make a deposit or any other services that you do at the bank. If you're planning to visit a drive-through, ask about the restrictions that the bank has on transactions through the drive-through. They can sometimes be, they have a limitation on deposits they accept, or even change orders at the drive-through window. Some banks are not allowed to exchange change at the drive-through window. So if your business is heavy on change orders, if it's a laundromat, or you just need change to operate your daily transactions, make sure if you're visiting a drive-through that there's no restrictions and you're able to continue doing those services. Another question to keep in mind is what kind of products and services the bank has. Does banking services meet your business needs? And what are the fees associated with them? I recommend you actually evaluate the services of each bank you visit. Take your time, review the bank's products brochure, check the funds availability disclosure, ask the banker to provide with like a fee schedule, compare everything to your business needs, and then make a decision. Also, another thing to keep in mind when you're talking to different bankers and visiting different banks is the FDIC insured sign that you see, and understand how your coverage works. Most of the banks are usually covered up to $250,000 per tax ID. Make sure you understand your coverage when you're opening a business account and where you're adding signers. There is a difference between banks and credit unions. So when you do your research, make sure you understand if you're visiting a financial institution or a credit union, because the coverage will be different. So let's move on to, well, we're actually on the checking accounts, business checking accounts. So let's take a deeper look at the business checking accounts that are offered at the bank. There's several different accounts that are offered for businesses at different banks. Most of them are driven based on balances you carry and number of transactions you plan on doing at any given time. However, there's also a lot of similarities. For example, a commercial checking account is geared for a higher volume of transaction. It has a larger minimum balance requirement. So when a customer comes in, the first thing we ask them is, how long have you been in business? And that kind of gives us an idea of what kind of account is going to be a good fit for them. If we having this conversation and where our customers telling us they've been in business for quite some time now, and they have multiple customers and a lot of transactions, we know maybe a small business checking account is not going to be a good fit. Maybe we should be looking into commercial checking accounts. And then small business checking accounts might have no monthly service fee, and they might be absolutely free at one bank, and then another bank might have a small business checking account with a monthly maintenance fee and a minimum balance requirement. So I recommend you compare business account packages offered by different banks to find what works best for you. Usually the smaller financial institutions like your local banks are going to have the free business checking account with no minimum balance and no monthly fees. And larger financial institutions that are geared for more of a corporate account are going to have a minimum balance required on your business accounts and maintenance fees. So check around. Sometimes there's pays to shop around, inquire within different financial institutions to fully understand what their products and services. Once your account is open, take the time to read the business deposit agreement provided to you. And every bank during the account opening, they must provide you with a business account agreement. This is mandatory. So, and this agreement will include information regarding ability to withdraw funds, how many signatures you need for checks. Some accounts are set up with 2 signatures. Others business accounts only require 1 signature. They're also going to go over funds availability and holds. So that's everything you want to learn and kind of understand before you dive in deeper, because there might be fees associated with other services either you're not ready to pay or there's no need to pay for a startup or a beginning stage of a life cycle for a business. Another very important thing to mention that I see happening to a lot of my small business customers They mix their business transaction and personal transaction. Sometimes they even run their business transaction out of their personal accounts. So it's very important not to mix business and personal transactions together. Any bank you'll go to will recommend you keep your business and personal transactions in a separate account. Please don't use your personal accounts to hold any business funds or any other business related transactions. Keeping a separate saving account or is a checking account or a credit card account is necessary for accurate record keeping. And it also may be even required depending on your business corporate structure. And I would recommend checking with your accountant, CPA, or EA, whoever you have helping you organizing your business to make sure you're following the rules and there's no surprises during the tax time. Besides different business checking accounts, there's other additional services you might be interested in for your small business. One of the most popular and I would say also helpful services for businesses, especially for startup businesses, is our payroll services. So payroll services can help cut down on the number of checks you issue and even the potential of fraud, especially when you rely on the mailing system to get your checks over to your employees. Payroll can be direct deposited to the employees' accounts directly. Payroll is also available same day for your employees. And they don't have to wait 2 to 3 business days for a paper check to be deposited in the bank and then waiting for those funds to clear. So it is an advantage for your employees as well. Payroll services can also provide you access to the reports that you need to file your quarterly payroll taxes and keep track of record keeping. When it comes to using payroll services and planning and paying the fees, check with your local bank to get the prices associated with payroll services. There could be banks that are running a promotion that have, anytime you establish a new banking account, they'll let you use their payroll services for at least 12 months so you can kind of get adjust and see how it works before they charge you. So again, check around, call a couple of banks in your area and see if they have any promotions on business accounts or payroll services that come with a business account or any other treasury management needs. So let's move forward. So cash management services. There are many businesses that find it helpful to have more than one business account. Some business owners prefer to have their operating accounts separate from their payroll account. Some do it for record keeping, where it's easier to see what checks had cleared and what others haven't yet. Some choose to separate account for fraud prevention. If their account gets compromised and instead of shutting down the whole operating account, you can just shut down the payroll account and reopen a new one without calling multiple business partners and changing your routing number and ACH activities. So a lot of businesses prefer keeping those accounts separate for those reasons. For those businesses that have a separate operating account and payroll account, and to ease the burden of conducting transfers from operating to payroll accounts, bank can set up sweep features and link both accounts together. This feature is also known as a zero balance feature. So the way it works is with this feature, you can only make deposits into your main operating account, and then you use your payroll accounts to write the checks for your employees. As each paycheck is presented to the bank, the system then totals the checks together and moves exactly that amount to the payroll account from your operating account. So your payroll account is only funded for the same amount of money that you wrote the checks for. This way, money is never sitting there. The checks clear, and then you can keep a track of which check had cleared that account. There's another product on the market similar to this, and it's called the Sweep Investment Account. And this is for businesses that carry a larger balance and want to earn interest. Even though it has a similar method as the zero balance account, this account is used to earn interest on a large balances. All of the funds in the main account are swept daily into the overnight investment account, and they earn interest for that day. And if you're interested in investing into sweep accounts, check with your local bank and ask about their current rates for the sweep accounts. The rates are not going to be the same as you get on savings or CD accounts. They're going to be minimum rates, but the sweep account, investment sweep account, is good for businesses. They carry balances over 100,000. So they are able to earn interest, a little bit of interest, but still they're able to invest those the money and put it back into their business, and it improves the cash flow as well. So let's move over to the next slide. So since we talked about different types of business checking accounts and sweep accounts, I think it's time to talk about business savings accounts. And having a saving account can help build a reserve for unexpected needs. Setting aside some funds also shows your lender or loan officer that you're thinking ahead and putting cash aside for a rainy day. Most saving accounts have some sort of limitation or the number of withdrawals permitted each month. I know a lot of banks, their limitations are anywhere from 4 to 6 withdrawals. So if you have a business saving account or any type of saving account, if you exceed those limitations, what happened is during a monthly cycle, you may be required to close your account out, and a deposit account would be open, and the funds from the saving account would be moved over to a deposit account. So you really have to be conscious and understand what's your limitations when you're opening a business account. Is it 4 a month? Is it 5 a month? Or is it 6 a month? Saving accounts could also be used as a tool to earn interest, and different banks will run a different promotion to attract their customers. I've seen some saving accounts right now that pay 1.25 APY interest rate. So it really depends on the bank and their need to attract new customers and bring deposits. Shop around and see what those rates are, but there are some decent rates out there. Another popular product is a certificate of deposit. We also call it a CD. And the CDs work when you agree to keep your money in account for a few weeks to several years sometimes. In return, the bank agrees to pay you a higher interest rate. If you need to withdraw the money before the CD matures, you might end up paying a fee. There are a few exceptions for the fee reversal. So if you're thinking about opening a CD for your business, talk to your banker and see what kind of exception those would be in case you have an emergency and you need to break the contract associated with a CD. Also, as I said, the rates and terms and feature for CDs may be very significantly different from bank to bank. Sometimes it pays to shop around. Often banks will run a promo rate, especially now we're seeing the rates going up a little bit. So there's promotional rates that are popping in left and right. CDs also can be used as a loan collateral as well, or hold for a bank issued letters of credit. Some businesses are unable to get a conventional loan because they have not been in business for a certain period of time. So they would open up a CD and use that CD as a collateral to extend a line of credit or of a term loan that they need to operate their business and build their business credit that way. So check with your banker, see if a CD secure loan is an option for you. Okay. So what happens when you don't feel like walking or maybe driving to your local bank to make a deposit, or you'd rather not spend the time or money to mail in the check? Well, we have options now. One of those options is remote deposit scanner. And that is a device that you can use to deposit paper checks electronically. To get started, you'll need a scanner to capture an image of the check and maybe a personal computer. Sometimes it can even be a cell phone to transmit the images. Some banks may also issue a scanner at no cost to you, but they usually base it on number of checks or business deposits that you have. And one of the businesses are really coming to my mind right now that would benefit from using a scanner is condo associations. They have tons of checks that they collect monthly. Instead of taking those checks to a bank, waiting additional 2 to 3 business days for those checks to clean, they can scan them as they receive them. And using a remote deposit scanner allows a quicker access to the funds because funds deposited over the internet are generally available with just 1 to 2 business days. So, and then you'll get the ability to have a record keeping and once the checks are scanned, usually can dispose by shredding them. Another popular feature that all of my business clients love and use is online banking, which allows the business to really conduct nearly everything without ever entering the bank. And there's a lot of advantages of online banking, but the most popular features around my business customers is the ability to check their balances and get information instantly. They don't have to call a 1-800 number. They don't have to speak to a banker. Just log in and check your balance instantly. The information online is updated throughout the day, so you can view your account activities within minutes of happening. Another good feature is you're able to view the images of the checks you've written and even the checks that you've deposited. And you're not only able to view the front images of the checks, but also the back endorsement copy. So if you ever wrote a check and it's unclear if the bank cashed it or not, you can flip that check and see who endorsed the check and which bank it was deposited to and what was the amount that it was cleared for. So it's a lot of helpful information, especially during businesses that deal with a lot of checks and sometimes want to check rebates or maybe refunds, and the customer calls back and say, well, I've never gotten a check. That check never cleared my account. I don't remember depositing. This way you can log in online, look at the image of the check, check the back, and see who endorsed the check and the bank that cleared the check. When using online banking, please remember, you want to be extra careful and avoid any fraud. Change your password often. Sometimes when your business becomes a victim of online fraud, there's a chance that the money might not be recoverable and the bank may not be responsible for the loss. So please be careful when logging in. Make sure you understand how secure your network and who's around you, who's looking at your shoulders. Don't share passwords or usernames with anybody you don't trust. Let's move to merchant processing. So there are additional banking services that you may be benefiting when establishing a new business. Your sales could increase by accepting consumer credit cards, and many banks nowadays offer something that's called merchant processing services, and they allow your business to accept credit and debit cards. So that would be a next step. You're opening a business, let's say it's a retail business, and now it's time to get those devices so they can accept debit and credit cards, so you can attract more customers, and it's convenient for them to have other payment methods except cash and checks. So the merchant processing services may include point of sale card reader, terminals, marketing support, and online tools. Also, gift cards or prepaid debit cards function just like electronic gift certificates, and they can also provide advanced sales and generate income during holiday and season and special occasions. So if your business is, I have a lot of nail salons and they love the ability to issue gift cards. During Christmas, 50% of their sale comes from the issues of gift cards, where it really boosts their sales and allows them to add more cash flow to their business. If you're providing wholesale products, then the bank may be able to establish an online system for you to receive payments from your merchant or from buyers, which can decrease the time from billing to receipt and again improve that cash flow. And everybody, once you go into the bank and ask for financing, everybody's looking at that cash flow. Having a good cash flow is really crucial when you're seeking finance opportunity. So everybody's going to be collecting your information, tax returns, profit and loss statement, balance sheet, to determine that cash flow that you need to see if you're capable of repaying the debt that you're asking for. So since now we have an open business account, let's talk about reconciling accounts. And deposit accounts should be reconciled when you receive your monthly statement. But with online access, you may want to review your account activity even more frequently, perhaps daily or maybe weekly. Your bank statement should contain directions on how to reconcile the accounts. If you're having difficulty balancing the statement to your records or find discrepancies, you need to contact your financial institution. And if you find errors in your statements or fraud, you need to contact them as soon as possible. There is a different grace period on business accounts than on personal accounts. That's why online access is so important. So you monitor your accounts daily. And you call in anytime there's fraudulent activity or an error, you want to call in, notify the bank as soon as possible. The sooner you'll notify the bank, the more chances you'll get your money back. And I'll go over a few tips of reconciling your statement that's really helped a lot of my customers. First thing they look at is the amount encoded on the bottom right of the check should be the amount for which the check was written. And a lot of customers that call in, first thing they notice is they wrote for that check, a business check, to refund the customer for $20, but then it cleared for $200. That's why we want to make sure all of our clients have online access so they can see the back of the checks to make sure the encoded check cleared for the same amount that they wrote the check for. Also, retain remote scanner software reports and compare them to the deposits that you made, just to make sure the checks were written for the right amount and you got the credit that you deserve. Reconcile the interest in your business loan accounting records to applied rate each month. If you do have a CD or a saving or an interest sweep account, make sure the interest is added to your principal. Make sure you record it. It is so much easier to keep track of it on a monthly basis. You'll save yourself time and frustration caused by errors or at the end of the year when you'll need to collect that information. So I recommend you keep track on a monthly basis, and also make sure to check your principal balance as well. So how do we protect our businesses from online theft? It's very important that you take some basic, safe computing measures to stay safe online in order to avoid potential losses associated with online fraud. You need to ensure that you use a strong, unpredictable passwords. They're updated frequently, and we recommend updating your password if possible once every 30 days. Avoid using common names that may be identified by clever cyber thieves. Make sure your computer has the latest operating system and antivirus security updates. If your business operates on the go and you need to manage your bank relationship remotely, avoid using public wireless hotspot. Sometimes those internet connections might be compromised. You never know. Train and educate your staff, if you have any, about phone calls, emails that relate to your business banking relationship needs. Also be aware of correspondence, such as maybe over the phone, emails or letters from individuals claiming to be your bank representative trying to get you to verify your account information or warning you about an recent upgrades and asking your credentials. There's ever an email or a phone call that you're getting that you're not sure about, call your bank, call your financial institution to verify if the email or call is legit. Be careful providing your business and personal account information over the phone or via email. We're seeing more and more online cyber fraud happening every day. And those criminals are getting smarter and smarter. So really be careful on how you handle your information online. Let's talk about some of the ways small business owners typically finance their business and operating expenses. In my experience, small business owners typically need to borrow money to buy equipment, or maybe they're purchasing real estate, some looking for a loan to finance their operations, expand their marketing team, or others look for just a loan to get through their payroll expenses. For most small businesses, operating expenses, we can fund them in 3 key ways. First thing is personal lines of credit. And those are such as credit cards, home equity lines, or maybe even personal loans. Financing your business with personal lines of credit has some disadvantages. They are not a perfect fit for every individual business owner or a business. Owners using a credit card and home equity lines can quickly find themselves taking too much debt, debt that cannot reasonably be supported by projection revenues of your business. It's hard to tell how much of a loan you need when you don't fully understand the ability to repay the loan using your revenues from the business. Also, there's a potential to lose your home if you're not able to repay the funds on your home equity line of credit, or maybe ruin your credit if you're taking too much personal debt and then you can't meet the minimum payment requirement associated with it. Second way to finance the business is business lines of credit. And those can be a flexible way to build credit for your business. You can apply for business line of credit in your local bank. Nowadays, you can even apply for business lines of credit online. But before applying for a line of credit, a business should really consider on how and when you'll generate enough revenues to repay the loan. Make sure you're not using a short-term financing tool to finance costly long-term debt. When I do say line of credit are a good fit for businesses that can repay that line within the next 3 to 6 months. So maybe somebody, a construction company that has a project due and they need a line of credit to support that project, buy extra equipment for that project, lumber, because the prices of lumber went up by 170%, and they just need that extra cushion. But once they get paid, then they repay the line of credit. You won't go out and buy an equipment loan with a line of credit because equipment is usually more costly and it's going to take you more than 12 months to repay the loan on equipment. So a line of credit is going to operate as a short-term debt, just to get you from spot A to spot B, knowing that you have enough funds coming down to pay the line of credit. And then we have the business terms loans. And those are established for a set dollar amount to be repaid in installments over generally 3 to 5 years. Business term loans are recommended for purposes such as financing the purchase of equipment, also maybe a small real estate office or just a property for your business. Term loans are often secured by assets that you're purchasing, but they're more predictable. The interest rate is fixed and the payments are set every month. And also it gives you the longevity to repay a business term loan within 3 to 5 years, which will free up some availability of the cash flow and not impact your business in a negative way when you're requesting more than one finance opportunity. So another convenient option for businesses is credit cards, because credit cards allow you to defer payment until you pay off the balances. But you got to be careful with credit cards. You really got to choose your credit card after carefully checking the interest rates and fees and terms associated with it. Some business credit cards can offer great rewards, and a lot of business clients are utilizing those credit cards for the reward itself. Credit cards are easy. I mean, we're familiar with them. We've been using them for a long time. Pay your credit card bill on time to build your credit, and then avoid paying interest on purchases. Additionally, credit cards can be used for other users, also known as authorized users. However, you got to be careful because those authorized users are really not responsible for making the credit card payment. So before requesting a card for somebody who works at your office that runs errands, read the contract and speak with a bank about your responsibility and if there could be any limitations that you can add on to the authorized user. And if you have an account that you're not using, credit cards that you haven't been used for a while, you should either cancel them or destroy them or store them in a secure place so to avoid them being compromised, avoid somebody in your office or maybe somebody getting a hold of the card number and then putting unauthorized transaction on it. So another great thing that we have in our commercial lending world is SBA Guarantee Lending program. And if you're a small business and you need to borrow money, your best option may be a bank loan guaranteed by the SBA. The SBA itself is not the one who's making those loans, but they're the ones who are backing those loans up, portion of them. And then they help, those loans help borrowers qualify for attractive interest rates and financing. And if you need a loan for less than the lender's minimum amount, you can ask a bank for a referral to a lender participating in our SBA microloan programs. The banks usually have a minimum amount that you can come in and ask for financing. For most of the banks they do a conventional way of financing. So any loan that you would apply for would require to be at least anywhere from $30,000 to $50,000, if not more. It really is going to depend on the bank. If you're a startup business and you're looking for a line of credit and you're not really looking for a $50,000 or $60,000 or $70,000 loan, you're looking to start up with something smaller, there's a great program, SBA. It's a microloan program which provides you access to loans up to $50,000. Not every lender has an SBA or participates in SBA microloan program. You can go on to sba.gov, websites to see a lender near you that participates in those kind of programs, or you can ask your banker for a referral to a lender that works with microloan. Also be aware that certain borrowers, such as veterans or victim of disasters, may be eligible for special loan programs at discounted rates. So how do we then improve our chances of getting a business loan? Well, there's something that is called the 5 C's of credit that the bank used to determine the ability and willingness to pay back the loan. So the 5 C's are capacity, capital, collateral, condition, and characters. And I want to take some time to go over each so it will help you understand what to look for and how to get prepared when you are ready to go in and ask for finance. So capacity. The capacity is the lender will want to know how you intend to repay the loan and how much of a loan you can actually afford. How does the lender determine the capacity of your loan? Anytime you apply for a small business loan, any type of loan, the lender will ask you to provide the last 2 to 3 years of your business tax returns. They'll ask you to provide financial statement, a balance sheet, profit and loss, and sometimes, in some cases, even personal tax returns. The information is collected and sent to an underwriter. And what they do is they throw a cash flow table to check what the revenue is comparing to how much you're paying out and determine the ability to repay the loan, which is your cash flow and capacity, how much your business can afford to take and pay for a debt that you're applying for. Second C is capital. Are you investing your personal money into the business? Are you putting a down payment? Do you have a saving account established somewhere else that you're considering to use in case your business is not doing well? What is your skin in the game? Are you putting any capital of your own money when asking for a loan? Third is collateral, and collateral is a form of security you provide to the bank. Are you pledging any assets of your own, or is that equipment that you're buying is going to be used as a collateral when deciding on a collateral for the loan? Or maybe you need to expand your business and you're looking for a new property for your business. That could also be a collateral. And conditions. How will you be using the money? How are you planning? If you're applying for a loan for a line of credit, and then you're telling the bank that, okay, well, I'm going to be using the money by purchasing new computers and this equipment that I need for baking. Well, that's not the right use for a line of credit. Conditions are also economic conditions, local in your specific industry, but also could affect the outcome of your loan or repayment of the loan. If you're in transportational industry, the gas prices, diesel prices are up. The prices they get per mile is down. A lot of banks are staying away from transportation businesses right now. It's just because of economic conditions. So sometimes it may have nothing to do with you particular, but the economic condition would dictate the bank if they're willing to take the chance and provide you with a loan. And number fifth, and I think that's the most important one when evaluating a new credit, especially a credit that you have no history of with your bank and it's a brand new customer, it's character. And character refers to your personal integrity. It refers to how you handle your money. And you would ask, well, how does the bank know my character? It's not like I'm providing a resume or references. Well, you're providing personal tax returns, and then you're filling out an application, and then you're signing on the bottom of application, giving the permission to run your credit. And then the bank runs a credit check, and they're looking for convictions, previous bankruptcy, any negative information against you. They also look at your personal debt to income ratio. Have you been late in the past 12 months? How do you handle your bills? What's your debt to income ratio? How many revolving accounts, like credit cards, do you have compared to term balances like mortgages and other traits on your credit? So there's a lot of different ways to really get to know your client without asking them directly, by looking at financial history, statements, letters, tax returns, and a personal, threw it out of my head, and then personal credit scores as well. Also remember, a lender must evaluate your ability to repay a loan based on projected cash flow. So there's two types of lenders. And when you go into a bank and you ask for a loan, you're going into a cash flow lender. A bank, any bank you'll go in, is a cash flow lender. They're checking your cash flow to see if you would qualify for a loan. They're checking your revenues. They're not valuing your loan based on the collateral. They're completely evaluating your loan based on the cash flow and income that the business makes. You could be purchasing a nice piece of equipment that's really is going to appreciate in time. But if you don't have the cash flow to pay for it, unfortunately, your loan will be declined, because all banks, all financial institutions that are FDIC insured are cash flow lenders. There's other lenders, they're collateral lenders, and we call them third-party lenders. And they're usually equipment lenders. Those are your dealerships, your ENGS companies, and other third-party companies that specifically, they check your cash flow, but they base their interest rates and they base their loan proposal on your collateral. Those collateral lenders will have a higher interest rate, way higher than interest rate you're offered at a cash flow lender like a financial institution. Also, it helps to prepare some sort of business plan, showing exactly how you're planning on repaying this money. A business plan should also include overview of the company, explanation of products, services, marketing plan, and what makes you different from other competitors out there. What makes you stand out and unique? Those business plans really help to determine and present your loan inquiry and to kind of build a picture of your business and the importance of having this loan to support the business growth. Okay. Well, in conclusion, there are a few points to remember. Choose the right bank for your financial needs. The products and services that banks offers and fees do vary between banks, so sometimes it does pay to shop around. Banks offer a wide range of loans and deposit products to meet your needs. You may be able to deposit checks into your account from your office without ever visiting the bank. If you need to borrow money, consider SBA options. The microloan option is a great fit for new businesses. I would say any business that's been established for less than 2 years, the micro option is a really microloan option with the SBA is a really good tool. And then conventional options are more geared for businesses that have been in business and can provide operating statement and financials for at least 2 years. Keep your business and personal accounts separate. That's going to help with finding, that's going to help with a couple of things. Getting the loans you need, if you can separate. Now, we know it's a standalone business. It is not a hobby that you run on your free time out of your personal account. It also helps with, at the end of the year, once you file your tax, with your business tax returns, even personal tax returns, and take precautions to avoid fraud or other preventable losses. We're seeing a definitely increase in online fraud. There's increase in business fraud with checks being lost in the mail, people getting your account number, forging checks. So it's all happening. Be careful on how you handle yourself online. Other things to remember is establish a cushion for unexpected expenses. Like we spoke about, perhaps a saving account that can help secure a loan if needed, or a CD for those businesses that are just starting off. Maybe they want to put the money aside and use that CD as a collateral for a loan. It is important to know your personal credit score. If it's low, let's take some steps to increase it. Common things that we see that is a really quick fix to increase your personal credit score is make sure your payments are on time and the minimum balances are met. To improve your chances of getting a loan, go over the 5 C's that we just discussed. Make sure you understand what the banks are looking for when you ask for debt finance. So once you get an understanding, a better understanding what the banks are looking for, you'll be able to customize your business and present that information that our banks are looking to determine if they will be able to issue you a loan or not. Build a strong relationship with a lender. I would recommend before, during, and after the loan process. Like I said, the right person can assist you with growing pains of your business. They can recommend new products that you've never heard of. There's always good promotions to help a business grow, especially a startup business. So those relationships are really a key in establishing a credit and establishing a relationship at one financial institution. Well, our banking services station came to an end. I hope you guys enjoyed the presentation I made for you.